the troubled renewable energy part of the business, that Gensol Engineering is back in the spotlight, with the Delhi High Court today ordering the seizure of 76 more electric cabs operated by BlueSmart. Now, these EVs were leased from Gensol and were seized following a plea by Vriksha Advisors, which is an investment firm. And the judge actually ruled and barred Gensol, BlueSmart and their promoters, that's the Jaggi brothers, from selling or transferring these vehicles. So today's ruling essentially marks the 5th such court order in under 3 weeks, with a total of 698 EVs now under judicial protection, highlighting deepening concerns over financial mismanagement and corporate governance failures. And to give you a comprehensive background of this entire dispute and where it all started with Gensol and BlueSmart's relationship, the financial mismanagement and the defaults involved, even the SEBI's findings and the implications of this whole saga on both these companies, let's take a look at this report. What began as a promising tale of growth in India's renewable energy and EV sector has unraveled into a saga of alleged fraud, shaking investor confidence and leaving thousands of BlueSmart drivers in distress. Let's rewind. Gensol Engineering, based in Ahmedabad, first made headlines with ambitious revenue targets and a BSE SME listing back in 2019. Followed by a main board migration in 2023. The company, promoted by brothers Anmol and Puneet Singh Jaggi, promised a revenue leap to 4,000 crore rupees by 2026, driven by its EPC business and EV leasing arm, closely tied to cab aggregator BlueSmart. But trouble brewed in early 2025. Since February the 24th, Gensol's stock has been locked in lower circuits for weeks, losing over 90% of its market capitalization, down from multi-month highs to below 90 rupees per share by April. Credit rating agencies ICRA and Care Ratings downgraded Gensol's 2050 crore rupee debt to default status, citing delays in servicing term loans. SEBI stepped in after a June 2024 complaint alleged share price manipulation and fund misappropriation. Then, on April 15, 2025, SEBI barred Gensol CEO Anmol Singh Jaggi and promoter director Puneet Singh Jaggi from the securities market and from holding key managerial roles. The regulator's probe revealed that Gensol raised 975 crore rupees in loans to buy 6,400 electric vehicles, but only 4,704 were purchased for 567.73 crore rupees, leaving over 200 crore accounted for. SEBI's investigation uncovered a trail of diverted funds. In one instance, 93.88 crore rupees from an IREDA loan was transferred to Go Auto Private Limited, with 50 crore rupees funneled to Capbridge Ventures LLP to purchase a luxury apartment in DLF Camellias, valued at over 42 crore rupees. Another 40 crore rupees was routed through Wellray Solar Industries to other entities linked to the Jaggi brothers, allegedly for personal expenses.
To say that Gensol Engineering has had a turbulent run of late would be an understatement. What was once a booming stock is now riddled with fraud, ratings downgrades and investigation by SEBI. I mean, when you announce a 1:10 stock split with 1,000 crores siphoned off, it's bound to raise some eyebrows. BlueSmart, founded by Gensol's Jaggi brothers and Puneet Goyal, found itself in that crossfire, so much so that its much-loved EV cab business has been out of charge for over a month now. Drivers are on strike demanding severance, but the co-founders are missing in action for all intents and purposes. The Enforcement Directorate has spoken with Puneet Jaggi and is on the lookout for Anmol Jaggi, who is still said to be in Dubai. Meanwhile, fleet operators are carving up BlueSmart's cab business amongst themselves.
Then, the Enforcement Directorate joined the probe, conducting searches in Delhi, Gurugram and Ahmedabad under the Foreign Exchange Management Act. While initial reports suggested Puneet Jaggi's detention, the ED clarified no arrests have been made. Meanwhile, the Ministry of Corporate Affairs is now investigating both Gensol and BlueSmart. Then, on May 7th, the Securities Appellate Tribunal denied Gensol's appeal for relief against SEBI's interim order, holding the market ban and ordering a forensic audit of the company's books. The tribunal gave Gensol 2 weeks to respond to SEBI, with a final order expected within 4 weeks.
A crucial chapter in this Gensol Blue Smart saga was written just this week. The Jaggi brothers have resigned from Gensol Engineering. While that's a plus for what was once a booming stock, the story is not over. Actually, it's far from it.
The Gensol case has raised serious questions about corporate governance and regulatory oversight.
If there is a false information, if there is a fraud, or if it is a moving of funds which is not correct, I think in the order, forensic audit also has been ordered. So I think these are the kind of egregious behavior which nobody likes them.
NSE CEO Ashish Kumar Chauhan told NDTV Profit that cases like Gensol highlight the need for stricter, more granular disclosure norms to protect investors. SEBI is now consulting stakeholders to curb pump and dump schemes and enhance transparency. As investigations deepen, the Gensol saga serves as a cautionary tale for India's startup ecosystem, exposing gaps in trust, governance, and oversight. For now, investors, drivers, and regulators await answers as this complex case unfolds.